Happy Good Friday, everybody. I did not even realize the markets were going to be closed today. So that is definitely going to put my projection for the drawdown to Monday because that's the next market day. So I am spot on on my holding my Monday projection for the first waterfall drawdown. And I want to focus on the MACD here. This is going to be really important. And then I want to talk about the way that the drawdown will look. It's not going to wiggle like this. I mean, we're going to get another dead cat bounce. I like this line, and then probably dead cat bounce off this guy, and then we'll do a little action off this one. Um, okay, so this is Brian Lewis with MMT Investing, and things just changed. So, um, what we have here is a very, very clean textbook MACD. It usually doesn't look this clean, but this is really clean. So we have a 31-day drawdown here on the MACD crossover to the bottom here. And this is a very clean single pointed bottom. Sometimes it's 2 or 3 hits, and it's really tough to calculate the next bounce um, because if it hits like 2 or 3 times, you can't tell where the bounce is. Like usually the first bounce would be the lowest point on the actual stock chart numbers, but it's not usually the lowest point on the MACD, so it gets hard to count. But when you get a crossover like this, like right where it pulled down, the crossover is right where it pulled down, and we got a clean point. So 31 days, like it's very easy to make an estimate from here. So we get 31-day credit cycle initial drawdown, and then we get the bounce where we start reacting and we start pricing in the market. And right here is 31 days on April 22nd. So we got the 13th of April right here as as a definite target for the drawdown because the market's closed on Friday. I started thinking that we might get the waterfall faster because we already consolidated here, but the market's closed. So I mean, definitely. So uh, on Monday, either looking for it to start here uh, and rain down from the top of the bull trap with the bullish sentiment, which it still looks bullish. So I actually like this as a dramatic scenario where we just like go up here and just smash this point, which would be crazy, and then just rain down. Like we'll probably cross both lines if we in one day. It'll be a candlestick like this guy to start the waterfall on Monday, and uh, and then I would be looking for, let's see, let's do some drawings. So, all right, let's grab the most dramatic situation that I can think of here, which is just like getting all the way up here, just maximizing the bull trap up like aggressively at the very point of this consolidation zone, just raining, well, not backwards into Sunday, just raining down, and this area in here has a ton of action. So I like this area for our little intermediate dead cat bounce, and then we might do like a little action and trickle along this guy. Um, that is what I'm thinking now as a very dramatic scenario with a ridiculous candlestick to start on this bull trap. And the MACD is so aggressive right now. Like if you go back and look at credit cycle drawdowns, the MACD, well, this one got pretty big too. So like this is a big one to compare to. This is a bull market credit cycle drawdown, and this one's about 3 months as well. So you get a dead cat bounce, you get 1 month with a dead cat bounce, and then you get your bounce here sideways, and then you get your bounce down. 1, 2, 3, 3 months. 1 month with the dead cat, 1 month with the little dead cat here, and then another month with the little dead cat. It's just like that. And this is a pretty textbook 3-month credit drawdown cycle. So you get a dead cat down, and then this is your bull trap, and a dead cat down off the bull trap, and here's another bull trap, and dead cat down off the bull trap. 1, 2, 3. So it's not always 3 months, and it's not always that clean. If you go back and find some other ones, like here's some drawdowns here where you get like a crossover on the MACD, and then you get positive growth here. So it ends up pulling down and not crossing over, and then it runs up, and you get like a bounce way up here. This is a credit contraction with growth on a bull market, so you get these weird shapes where it bounces upwards. But these guys are, well, this is kind of sideways growth. See, like on this guy we got a drawdown and we got a bounce up, right? And then a bounce down. So is this 3 here? Yeah. So like this is like a dead cat on the way up here. So I looked at this cycle before and I said it had weird timing, and I don't think it does have weird timing. I think that this is a credit drawdown with growth. So we bounced down, and then we got a weird dead cat on the way up, and we bounced up, and then we got a bull trap, and then bounced down. So that seems to be the most common scenario, is sort of down, bounce sideways, and down again. But if there's growth, you get a bounce up and then another bounce down. So it's kind of hard to guess the heights of the bounces, but it's actually not that hard to guess the timing on the bounces, which everyone says it's super impossible to time the market. And when you get this kind of credit cycle, it is usually around 3 months. And when you get a very clean crossover and a very clean bottom point, so the MACD actually crossed over here, which would make it a 30-day cycle. But I'm starting here on my projection because I think that's where we started the crash based on the consolidation zone and the downtrend line. I say we started here. But if we have 31 days here, then 31 days to this point, and the height of this point is not like fixed on this line or anything. It's just that your second bounce is quite often sideways, and it just so happens that this downtrend line crosses this bottom support level just dead on that exact day at 22. So there's no other point that I would have picked for the bounce here. But I mean, this is the markets, and we are going to be pricing in the oil situation and the health situation. So I would put this as a best case bounce, and I don't know where the actual landing would be. It might get down in here, but I think this is just this is a textbook credit cycle so far, and it's actually weird because we pulled down and we got this dead cat bounce right on the bottom of this 2018 crash. So this is not exactly a bull market line. This is more like a insanity run-up line that we're on here. But this line is where we came down and we did our dead cat right up in under this trend line, which is beautiful and textbook. And then we came down here and our bull trap ran up right on this. This is the bull market trend line from the bottom of the housing crisis all the way up into our bull trap right here. And we got a ton of action on this line already. We got over here, we hit it from the bottom, hit it from the bottom, hit it from the top. This is an incredible trend line that was so amazing that I started a YouTube channel. So I've been just like freaking out and kind of excited and a little scared of this whole situation here. And I was projecting like a little swing. Let me get this out of here. This was my projection. I'll leave these projection lines up even if they're completely wrong. But I was projecting like maybe a little swing and like a little chimney top thing out here on the 13th. And I didn't pick that arbitrarily. That's just like that's the turnover point for this kind of bounce because it takes a little bit longer to run up than it takes to come back down. Um, so I wasn't sure if I should pick Friday or Monday for this point. I picked Monday, and now that I found out that the markets are closed on Friday because of Good Friday, that makes it pretty easy to pick Monday as the starting point. So for Monday, I would either say we get right up here at open, which would be dramatic, or we just gap down under this thing. One of those two is what I would expect to happen. And then I think this is just going to be a drama fall. And I don't know like what kind of news we're going to get over the weekend. Like I think this oil meeting is a bunch of nonsense. And I'm sure there's going to be some bad news about the health situation. It's going to get worse for a while, but none of that, nothing that anybody says in none of those situations have anything to do with this reversal point. This reversal point is just the credit contraction drawdown mathematical position where this thing reverses, and it has nothing to do with what anybody says or the news. This is a reversal point. But the state of the economy will affect the landing point down here, and this bounce is probably about the same size regardless of how far it pulls down here. And then you have to price the economy in too to get the bottom part here, but this is really interesting. I have my notes here on the anatomy of a of a credit cycle or of a bubble here. I'll leave those up too. Those are funny. Okay, so this is an update on the MACD, which also, yeah, if you I am not a technical analysis person. I am a macroeconomics person. So this entire thing here, I would not have predicted like getting up under this trend line or getting on this trend line or anything like that. There's no way I would have predicted any of that in advance. All I was looking for is this credit cycle to turn over, which I didn't expect this thing to start for like another month or a month and a half. It came really early, and this drawdown is a bear market reversal drawdown. Like we are not in a bull market anymore. This is a bear market drawdown. So this is an absolute blow off top of the everything bubble. We are in a long-term bear market now. That reversal top is putting us into like a 3-year bear market. And yeah, and I was trying to make this a MACD video. I kind of got sidetracked. But let's take a look at the MACD. So it draws down, right? And then this like kind of oil situation, I think it started to pull down a little early. It started to converge a little too early. And this is part of the bull trap also. And then, so when the MACD is diverging back up to a reversal point, like it can be pretty messy. And this one is really smooth. But it does have this little tricky spot where it looks like it's converging and doesn't. But now we're getting to the point where the MACD divergence is almost as big as the initial drawdown. So that's it. Like it's gonna flip over right now, and once it flips over, it turns pretty hard. So like you'll see this thing go up, and you'll see it come down to a point, and how deep that point is, I can't guess. So sometimes it comes down to a point above this line and bounces, and sometimes it pulls way below it and bounces. But this thing is going to turn over, and when it's turning over, getting a higher high is basically impossible. Like when you reach the max divergence point on this, that's your highest high nominally, it's going to turn over, and then once you get down, once you get down to this point, a lower low is basically impossible. So here's your lowest low, but like it's tricky because it's turning over. So like if you get like a little low up here on the MACD, that's usually your lowest like nominal point. But we just got a single that's clean, and now we're just gonna get a reversal here, and it's gonna turn over and it's gonna shoot down really quick and bounce. That's what I'm looking for. So the MACD wishes you a happy Good Friday and a very fun waterfall on Monday. And we might like super dramatically like run all the way down to where we're gonna dead cat bounce like in one day. That would be a crazy candlestick. Something like this, like wow. But um anyways, that is my case for this bear market model, and if it does anything else up out here or shoots up, then this model is blown and I have to start over. But this is what it looks like right now, and it's been holding. So that's what I expect. And also, it's just almost impossible for it to run higher from here, just because the gravity of the MACD right here is so strong. It's gonna pull this thing down. Um, Regardless of the timing and stuff, if you're looking at this, uh, it's gonna turn over real fast, and we got a 3-day window here. So that is a longer analysis than I was planning on here, just mentioning the MACD, but that is the Good Friday update. This is not financial advice or advice at all. Don't ever listen to a word I say. Just ideas, just a model, and that's what I am investing based on, because I got short and short and short all in here on some Dell, and I have some Tesla, and I have a bunch of smaller tech stocks, and I actually have a little BP also. So I'm gonna see if we come down here, and happy trading.